Say hello to Michael Burry, born and bred in sunny San Jose, California on June 19, 1971. He wears many hats: a physician, hedge fund manager, and investor, hailing from the good old US of A. Now, let's rewind a bit. Michael did his pre-med studies mixed with a dash of economics and medicine at UCLA. His medical journey continued at Vanderbilt University School of Medicine in Tennessee. But here's the catch. Michael faced some social challenges due to Asperger's syndrome. Despite being a market segmentation maestro, he didn't have a ton of friends and wasn't a big shot in the financial community when he kicked off his career. Fast forward to today, and Michael's all about keeping it simple. Whether it's small cap, mid cap, tech, or non-tech stocks, he doesn't play favorites. He believes the real deal lies in undervalued economic sectors. That's where the juicy returns are. And get this, he's not one to buy into the whole market prediction frenzy. Michael's mantra is all about embracing uncertainty and steering clear of widely held beliefs. He'd rather chill in the comfort of knowing that those popular predictions might not be as spot on as everyone thinks. After all, he believes irrational stock values can pop up anytime, no matter what the market's up to. Smart guy, right? In Michael Lewis's book, The Big Short: Inside the Doomsday Machine, Dr. Michael Burry takes the spotlight as one of the protagonists. The book delves into his bold decision to bet against Wall Street and his accurate forecast of the 2008 credit and housing bubble's collapse. This move earned Michael Burry quite a fortune. If you've seen the 2015 film adaptation, you might remember Christian Bale portraying Michael Burry, right down to his exact attire. Christian Bale's portrayal seems to capture Burry's essence: socially uncomfortable, yet undeniably intelligent. A significant part of the book and movie's success can be attributed to Michael Burry. It's fascinating to explore his character and how he saw through the housing crisis in 2008 and 2009. While Michael Burry is widely known for his investment prowess during the 2008-2009 housing crisis, it's worth noting that he was a skilled investor before that. In fact, he has always considered himself a value investor, even when it wasn't the mainstream practice. Burry found success in his early investments, gaining a small online following through message boards where he shared his concepts. After completing his residency, Dr. Michael Burry took a bold step and decided to launch his own hedge fund. His journey, from his early investing days to his massive short during the housing crisis, adds layers to the compelling narrative of this intriguing figure. Absolutely, Michael Burry is, at heart, a major value investor, drawing inspiration from the investment principles of legends like Warren Buffett and Ben Graham. He's all about playing it safe and smart. Here's a breakdown of Burry's investment philosophy. 1. Margin of safety. Like Buffett and Graham, Burry believes in maintaining a margin of safety. This means he wants a buffer, a cushion, to protect against errors in his estimations or unforeseen events. 2. Bottom-up basic analysis. Burry takes a deep dive into fundamental analysis, focusing on the nitty-gritty of individual stocks, rather than getting swayed by market trends. 3. Search for attractive stocks. He's on the lookout for stocks that show promise, and he's not confined to specific sectors. Burry seeks out value wherever it may be. 4. Disadvantaged sectors. Burry is known to explore sectors that others might shy away from, finding diamonds in the rough, so to speak. 5. Portfolio management. Managing a portfolio is as critical as choosing the right stocks. It's about balancing and diversifying to minimize risk. When it comes to buying stocks, Burry looks for assets with sufficient volatility, the kind that causes a $1 stock to swing between 40 and 60 cents. He believes in snagging these assets for the lowest possible cost. Now, about volatility, while many shy away from it, Burry sees it as a friend. He argues that volatility is often misunderstood and undervalued. It's a tool for those who understand its potential. Burry's key mantra is understanding a company's intrinsic value before investing. His primary goal is to limit risk, avoiding significant capital losses. For him, the focus on intrinsic value and a margin of safety eliminates the need to rely on specific catalysts to recognize a stock's true worth. According to Burry, keeping it simple with outrageous value is more than enough. Michael Burry's approach to stock picking is rooted in research, which he considers his weapon of choice. He's not one to be swayed by the overall market trends. Instead, he focuses on the individual stocks. Burry has a broad outlook, willing to invest in stocks of any size, large or small cap, mid or micro cap, tech-related or not. The key criterion for inclusion in his portfolio is the ability to see value in a stock. Burry doesn't stop at the conventional. he dives into what he calls rare birds, which includes asset plays, arbitrage opportunities, and businesses selling for less than 2/3 of their net value or net working capital. These are reminiscent of Ben Graham's net stocks. These investments, as Burry puts it, are like finding rare birds. Adding another layer to his strategy, Burry incorporates businesses that align with Warren Buffett's preferences. These are businesses with a long-term, steady, and strong return on investment capital. If Burry can comprehend them, he might even include IT firms, similar to Buffett's style. These choices are seen as longer-term investments. In Burry's view, stock selection and portfolio management go hand in hand. Managing a portfolio effectively involves addressing crucial questions. How many stocks are ideal to hold? When is the right time to buy or sell? Should one consider industry diversity? And what about the balance between cyclical and non-cyclical investments? These are the considerations that shape Burry's approach to navigating the complex world of investing. According to Michael Burry, tax considerations should indeed be a factor in investment decisions, especially if your objective is to keep turnover low. Burry suggests that the level of importance given to tax considerations, as well as the objective of low turnover, depends largely on individual talent and personality. In his view, there's no need to justify your choices if they deviate from conventional wisdom. Burry incorporates some basic technical analysis into his decision-making process, a technique he picked up during his time as a commodities trader. He likes to buy when the price is within 10 to 15% of a 52-week low. This approach, he notes, has proven to provide some price support. However, Burry also cautions that fundamental research may not always be accurate. Markets can sometimes diverge from the actual underlying value, and other investors may have access to more information. Despite its limitations, he acknowledges that fundamental analysis is one way to improve your chances of success. In essence, Burry emphasizes the importance of understanding your own talents and personality in making investment decisions. He encourages investors to consider tax implications, maintain a low turnover objective, and incorporate a mix of fundamental and technical analysis to navigate the complexities of the market. Michael Burry's approach to portfolio management involves holding 12 to 18 stocks across various industries, even those that may seem gloomy. This diversification strategy is aimed at reducing volatility while allowing him to focus on his best investment ideas. The idea is to strike a balance between spreading risk and concentrating on high-conviction picks. Burry recognizes the enduring value of businesses with a long-term and consistently high return on invested capital. If he can understand them, this might include IT firms, which he sees as rare birds in the Buffett manner. These rare bird investments, according to Burry, should be held for extended periods of time. Thank you for joining us on this insightful journey into Michael Burry's investment philosophy. Investing, as Burry sees it, is a blend of scientific art. We hope you found value in his unique approach. For more engaging content, subscribe and stay tuned. Until next time, happy investing.